This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Welcome to Breaking Banks Europe, the #1 global fintech radio network. This is episode 267, News from the Fintech Front for July 2025. And today I have with me Leon Ifayemi, Director of Coalitions and Research at the Center for Finance, Innovation and Technology in the UK, as well as Kristy Duncan. And she's the founder and CEO of Women in Payments. Thank you both for joining.
Nice to be here.
Likewise. Thanks for having us.
Great to have you here. So one of the things that I noticed was that both the UK Starling Bank is considering a listing in the UK, and that's coinciding with Wise saying that they're shifting their primary listing to the US. So Leon, how big a blow is this for the UK and Europe as a whole?
Well, it's a big challenge, I think, for us generally. I mean, it's not unusual to see businesses raise their startup capital here, build the discipline that's required to scale a successful business across Europe, and then move to the US, where they have greater access to scale-up capital, to funding, and also those investors who naturally are retail investors who are more used to buying on the stock exchange. So an IPO in the US or in North America is likely to get you better traction than it is here in the UK. Revolut is just one example in a whole trail of examples that we've seen in the past. And I think to address that issue, the UK has to do better with attracting inward investment from global investors at the scale-up phase, and also optimize on the benefits that you would accrue by listing on the London Stock Exchange rather than on NASDAQ or elsewhere.
Because if we lose a pipeline of future champions because of these kinds of things, I mean, that is really the bigger risk, right?
Absolutely. There are also knock-on effects, including, on hiring. As businesses move their headquarters to the US, they also make various different hiring decisions. They tend to orient their product decisions and roadmaps around the needs and interests of those based where they're IPOing, and that has a great on sort of compounding effect on what we're losing here in the UK and across Europe. So something we need to address in our strategies, but it is on the radar of those in government across Europe and in the UK, something we could potentially touch on as we continue the discussion.
I think that's really important. Well, great. Thank you. Well, remind me if I don't touch upon it later to bring it back in the conversation.
Can I put just a quick different spin on that one?
Sure.
I just want to look at it from the perspective of looking at new markets for these, scale ups. And clearly Starling Bank is looking for new markets, and the US market is an obvious opportunity for them. But also I think it allows them to see how other markets operate and learn from that and bring different perspectives, so that when they do their innovation and their product development, even in the home market of the UK, they're informed by other markets that can perhaps help them innovate differently, or in ways that might even benefit their home market. Just a different perspective.
It's a great point. I suppose the question is the requirement for that IPOing somewhere else? And if they could achieve that by IPOing in the same country, but perhaps opening up local offices elsewhere, that might be a route to achieving that same outcome that the government, domestic governments, the European governments might want to prioritize. So it's a difficult question to ask, right? But I think that there's got to be a halfway house between the two.
Fair. And I do think that it talks to, competition and making sure we're not losing the race over here in Europe, in the UK. So moving on to Anti-Money Laundering Authority, which was created last year, but it formally assumed legal powers July 1st of this year. and it signals that the EU will focus on the crypto sector because they see risks due to inconsistent controls between these EU national regulators. So what do you think of this? And who wants to take this first?
Well, I'm happy to kick it off. Clearly, there are lots of concerns. We want to definitely address the anti-money laundering issues, that of which there are many, and we've got inconsistency in how they're regulated across the different countries in the European market. But I think the timing wise also dovetails with the US's move to allow stablecoins. So in addition to these AML and ATF concerns, which aren't insignificant, but there's a number of concerns which might have been raised by both the BIS and the Bank of England. BIS is noting that stablecoins linkages with traditional financial system are growing, which raises policy challenges, including preserving financial integrity, mitigating financial stability risks. The BIS notes that the broader use of foreign currencies, such as US dollar denominated stablecoins, could raise concerns about monetary sovereignty, and we certainly don't want that. Bank of England noting that the widespread adoption of stablecoins could also divert funds from traditional banking, which could reduce the availability of loans and potentially destabilize the financial ecosystem, which appears to be the case in the US, where the new Genius Act, which was just passed this month, will require that all stablecoins must be backed 1-to-1 by US cash, overnight treasuries, or repos. So a couple of motivators there. One, that we don't want the money to go missing, as might have happened in the past. But I think there's another hidden agenda, or perhaps underplayed agenda, on the part of the US government here, because they're trying to create a structural demand for US government debt, which is supporting the US domestic monetary sovereignty. So we've got a couple things in play here. It's a very, very big, very, very far implication topic that's going to have ripple effects across the markets and around the world.
And Leon, any thoughts about this as it relates to some things Kristy said, or, just making sure that we're not having cryptocurrency involved in money laundering or terrorism finance or things like that?
Well, I would second everything that Kristy said. I mean, it's so interesting. I mean, the way the stablecoins work, for those who, I mean, most of those watching this will be more sophisticated folks, but for those who don't, it's the stablecoins are pegged to a currency, and the vehicle currency, the sort of most widely used currency in the world, is the US dollar. So I think what the first mover advantage that Trump's Genius Act gives to the US is that it reinforces the US's sort of preeminence around the world as a sort of the leading currency. Also, I think for those who typically haven't been able to access dollars for whatever reason, might just buy stable coins as an alternative. So it creates sort of a secondary, I think it creates a bit of a secondary market for fraudulent use of the dollar, in ways that may not have been possible if we were just sticking to your typical fiat currency. And we don't know what that will look like, right? What does fraud happen? What sort of fraud might occur via stablecoins that pegs to the US dollar rather than just by using US dollars directly? It's yet to be seen, but I think we've got to let that play out a little bit.
Very interesting territory, and definitely we need to keep an eye on all this. Okay, so I'm going to now move to the Smart Data Initiative in the UK. Leon, can you tell us about this bill that the UK Parliament passed?
Yeah, so right now is a really exciting time for smart data. Really what smart data is about. It's about taking all the data that's attributable to you as an individual and then making that shareable across the ecosystem for an infinite number of use cases. It could be, for example, that you want to apply for a mortgage, or you want to even just go and book your tickets to take a flight from California to London. And really, the biggest enabler for that is our digital IDs. Digital IDs can be shareable from your phone or via the cloud, whatever else it might be. the UK government is projecting that this is going to be the biggest sort of economy grow over the next sort of 10 to 15 years. And the Data Use and Access Bill was passed to create the parameters in which digital IDs and other data sharing initiatives will thrive. So it will look at, what protections do you have as a consumer? What rights do you have from a consent perspective on sharing your data? What are the obligations of those who are holding your data on your behalf? And what are the limitations they have in sharing that with other data consumers, those who might want to use your data in the provision of various different goods and services? And that's exciting, right? It will make a lot of the things that we envision in the future with respect to AI and all these sort of smart data initiatives real. At least it's the foundational base. But I think as things progress forward, we'll start to see where things might have been missed, and that's just naturally the case with these types of bills. They have to be coupled with regulation and standards to make them work. Some of the work that we're doing at CFIT is trying to address some of those gaps, but I think it's a great start. The government has set up a smart data group to try and think about consent in particular. I know that when it comes to data sharing, it is a very scary thing. The perspective from some is it's very big brother, government spying on all of us. But there's a lot of convenience and market benefit to be accrued. I mean, you think about it as a home buyer, for example, if you had these types of data sharing initiatives, you could go get a mortgage, buy a house, and go through the entirety of the home buying process without having to reshare your data with multiple different stakeholders. So I think businesses recognize and individuals recognize some of the benefit, but they're afraid of what government might do with the data that's being shared. So I think we need to address that. In some, government's estimating a 27.8 billion in value for everyday consumers.
That's amazing.
So I think it's something that we need to continue to explore.
So is the UK a forerunner in this?
We consider ourselves to be. I won't make any claims on behalf of government, but other large contenders are in the EU. The EU have the EIDAS sort of framework and are exploring a wallet that's interoperable across all European countries. The approach is slightly different. The approach that we've taken is slightly different. Of course, I would say that I do like the UK, the approach that the UK has taken, and the standards that we're writing, I think, will enable it. We are the first to write a standard for example, IDs for properties. CFIT, the organization that I'm with, is writing standards around what it means to have an ID for an entity and how you might be able to port that around the ecosystem for example, submitting tax returns with a click of a button, submitting accounts, being able to register on Amazon or TikTok with verifiable credentials if you're selling goods and services via those types of marketplaces. I think the potential is great, and I would argue that the UK is leading in that market in that sense, albeit the approach that we're taking is slightly different to other jurisdictions like the EU.
If I can just chime in here, certainly in Asia, there have been a number of initiatives for digital IDs. Singapore's got their Sing Pass, and they're now using it to make payment systems for the Pay Now interoperable with payment systems, instant payment systems in other markets. So that's really interesting. They're now interoperable cross-border, cross-currency with Thailand's Prompt Pay. And this digital wallet, digital ID it's really a cornerstone of enabling markets to migrate to fully digital services on, as Leon mentions, a number of different platforms, a number of different use cases, which is really, really exciting. And we've seen how in India they've gone in parallel with setting up not only the UPI, Universal Payments Interface, but the digital ID, the Aadhaar, and together those have really fueled the migration in India to digital payments, digital financial services, digital financial inclusion. It's been a real accelerator for that market, and now they're starting to get take their digital payment system and go interoperable with other countries. Very, very exciting. So India's digital payment system is now interoperable with Sri Lanka, Nepal, and Bhutan. So it's been a bit of a springboard enabling them to do other things, which is so exciting.
Absolutely. And it looks like, the EU, the European Commission in May adopted this new set of implementing regulations for the advancement of the European Digital Identity Wallet. And they're looking to have, the goal, have this widely accepted by 2026. So we'll see, how acceptance goes within Europe and then how it goes in the UK. But I am very excited that the UK has some really more innovative things than just the ID for people, right?
I agree, and I think the challenge will be as we move further down this journey is it's really looking at how you then make it interoperable across borders. I mean, if you look at payments, for example, I have in the UK, I'll have if I want to make a payment to Kristy, assuming she had a UK bank account, I could just use her sort code and account number, and it'd be quite easy to do so. But the moment she goes across boundaries, across borders, I need different tools to do that. So what we need is an equivalent of an IBAN, for example, for digital IDs. This means if I have an EU wallet, I can go to the US and use it. Or if I have a UK wallet, then go to China and use it. That isn't the case at the moment. Countries and sovereign states are thinking about their ID strategies very insularly, and that's fine. They want sovereignty over how they issue government credentials, passports and digital driver's license and all that sort of stuff. But that has to be shareable across borders if you want to use them as vehicles to attract inward investment from other countries, if you want there to be greater a flow of goods and digital goods and services across national borders as well, these sort of invisible digital national borders. And that's phase two. That's still yet to come, but I'm looking forward to that part of the conversation too. And I think countries that position themselves at the forefront of that conversation will lead in sort of this global smart data world, not just the smart data world that works on a domestic level.
Yeah, and that is definitely very important. Now, I'm going to go to some other reforms that have to do with the UK, the Leeds reforms that came out in mid-July. Can you take us through that?
Absolutely. So the Chancellor of the Exchequer delivered her Mansion House speech in July, which sort of made two announcements that I think are really relevant for financial services. The first of which is the Leeds reform, and the second of which is the Financial Services Growth and Competitiveness Strategy. The Leeds reform really was thinking around how we can make the investment landscape in the UK a bit more robust. So I'll start with the first part of the Leeds reform. The government wants to make everyday people more sophisticated investors. Most people will either put their money into savings or put money into certain government vehicles that are designed to help them get on the housing ladder. That's the route to wealth and to financial freedom for most people, at least in their own minds. But if we look at global stocks and other investment vehicles, those have outperformed the first two routes to wealth accrual substantially. And so governments, it's really an education piece. How do we equip everyday people with the right tools and insights to be able to make better decisions and guide them to the right folks who are providing good services to help them invest? So that's the first piece. The second is a really interesting concierge service that they're offering to international investors to help them understand the domestic UK landscape and hold their hands as they make investment decisions in the country. I think that's quite interesting. There are a lot of different things you might want to do if you're an American or Canadian venture capitalist, for example. You might be slightly worried about investing in British businesses, and the UK government wants to relieve that burden on folks by creating this concierge service. I know, for example, when I was in Canada, I was sitting on the Techstars program. We met loads of investors who said that we had set up a local Canadian office if we wanted to raise monies. It was very attractive to us. I didn't have the legal expertise or support in my previous business to do that, so we lost it on that opportunity, a UK company. And instead, this concierge service would just bring those monies here with legal support to give foreign investors the comfort that they need, that their investments are protected, and to understand the risk associated with investing here. And for British businesses, it would be great. It would be great too, because of course the pool of monies that they have access to is greater. So I'm quite excited about this. Time will tell whether it's a successful part of the strategy or not.
I think that's very exciting. I mean, I know that sometimes as investors, I'm an angel investor with a group of other angels, we complain that we don't have the same kind of benefits that angels in the UK already have. This is, of course, different, but you guys have these EIS and SEIS schemes that really help you to be able to, if you would lose some of your money, not lose it all, right? For these concierge services, like what would that entail? How much do you need to be investing in the UK to be able to benefit from that? Or is it so early days that we don't know all that yet?
I think it's still early days, but my assumption, my gut assumption, just knowing how government works and thinking about the practicalities of delivering this type of service, is you'll want to focus on some of the bigger investors, but in smaller businesses at early stage. You get the greatest amount of capital for the least amount of concierge effort, right? So businesses that are raising their seed capital, Series A, rounds, but from foreign investors who have hundreds, millions of dollars to invest. I think that would be the right balance to start with. And then, of course, if we needed to create a market for smaller, closer to angel investor size across borders, then that might be possible. But I think it seems like an impractical step to take in the first instance.
Yeah, I can imagine. So you want the big boys and girls to be coming in with the big buckets of money to stimulate lots more innovation.
To start with.
Yeah, I can imagine. Okay. I would like to look at some strategic hires, actually. So, Kristy, can you tell us a little bit about some of the hires that you've seen, like with Revolut's regional CEO and JPMorgan's UK chair for its securities unit?
Yeah, absolutely. I love this because we're getting in some more diverse hires, which we're not doing this just to tick boxes. We're doing it to build our business. And Revolut established a new Western Europe regional headquarters this year. And in June, just last month, appointed Beatrice Cossa-Dumurgier as CEO of its Western Europe office, bad mistake there, to lead its expansion across the EU. Beatrice is a senior hire from formerly the board of SocGen, former CEO of BNP Paribas Personal Investors. And I think what this does is it signals Revolut's deeper regulatory focus, perhaps in light of recent accusations that Revolut, among others, seems to be allowing Russians to transact globally where Russian banks are restricted under sanctions to trade outside the country. But her appointment also focuses Revolut's attention on market localization and expansion in France and beyond to the borders of Western Europe, highlighting the growing influence of women leaders in scaling fintechs as they take lead roles in commercialization and regulation. These are critical vectors for trustworthy and inclusive fintech growth across Europe. Another one was Blythe Masters, who's group CEO of FNZ, but has recently joined JPMorgan as its UK chair. To chair its UK securities unit. I'm sorry about that. She took over as group CEO of FNZ in August of last year, and she is a pioneer in structured finance and digital assets. Former CEO of Digital Asset Holdings, which is a blockchain innovator in financial markets, which was also declared a unicorn by the World Economic Forum's prestigious innovator communities. She has sat as NED on numerous boards across Europe and the US, and her appointments reaffirm that women are steering major financial infrastructure platforms and driving innovation in traditionally male-dominated sectors. So it's lovely to see that among many other recent senior appointments. These two in particular shine a spotlight on senior women who are taking the helm in some of the most strategic corners of European finance. These aren't just symbolic roles, these are pivotal roles. And what I love seeing is the female leadership now starting to shape the architecture of payments, the regulation, the AI, digital assets, and growth across Europe and beyond. Very, very inspiring.
So I find it very exciting. However, I am worried with what we see going on in the U.S. So these are European appointments that, there's, and unfortunately, I am going to the geopolitical stuff we said we wouldn't go to, but I can't help myself, of, seeing that diversity is not something of interest, and just having that, the current administration kind of taking away all the initiatives that had all the good work that had been put in before. Do you think that we would be, if this was not Breaking Banks Europe, but the US version, you think we would be able to say these kind of things, or you think that some of that good stuff is now dissipating?
Well, that's a really good question, Liz, and I appreciate the question. I think for me, when I look at it, it's not about what we say, it's about what we do.
I agree with you on that
And
for sure.
we can have public policies and we can paint the picture in our annual reports, etc., from a wordsmithing perspective. But what are we actually doing along the DEI axis? Are we actually just not promoting women anymore, or diverse, other strands of diversity, or are we continuing those strategies, not necessarily waving the big flags, but continuing with them because they're good for our business and they're good for our
Right.
clients and they're good for our employees and building our employee engagement and building our ROI. And, there's so many studies that show the many, many reasons why that diverse workforce is really important and really effective in building our businesses and our client bases. So I think
Absolutely. Yeah.
a lot of companies are continuing to do that, even in the US.
Good.
And that's the positive thing.
I think it's really important, because I do believe that the numbers show that a diverse, inclusive workforce gives you better a return on investment. So, you get more profitable businesses at the end of the day, less tunnel vision and stuff like that. I do not know if there are other things that we should be talking about that we haven't mentioned. So I'm going to open the floor and ask, is there something that's happened recently in the news for fintech that we didn't discuss that you want to touch upon more, or something we did discuss that you think we still need to discuss a little bit more?
Well, I just want to come in with my own supportive comments of everything that you, Liz and Kristy, have said about diverse hires. I think it's really interesting, that sort of landscape in the US, and I know that we've had conversations offline around using the college ecosystem, the higher education ecosystem in the US is a nice comparable example of what happens when you become more non-inclusive. So, of course, enrollment rates in the US have dropped significantly, in the context of the current US administration, and most reasonable economists and folks of that nature are projecting that will have knock-on effects for the rest of the economy. All of those folks will just go elsewhere. They're smart people. I know in the UK we have world-leading universities, Oxford and Cambridge, for example, and they're seeking to capitalize on that in their own strategies. But higher education, of course, isn't the only place in where that's happening. That's the only place it's been well documented in terms of the enrollment rates. But if we take this back to fintech, we'll naturally see the same. If we are looking at investors from not just the US and Canada, but also from the Middle East coming more to to Europe, and if we're seeing that, if the innovation ecosystem isn't attractive for diverse founders, whether those are women or people of color, whoever, just minority groups in that sort of landscape generally, it might work to Europe's benefit. So I don't know where it will go. I think it's Europe sees it as an opportunity. For the US, it may not work out so well.
I would agree with you on that. And Europe should leverage that opportunity, because, the US is letting less people in from foreign countries. That's
Yeah.
very interesting from, folks from all over the world that could be starting wonderful businesses, that could be starting the next Revolut. And now they won't be starting them as much in the US, it looks like.
No, it's very true. People go to Leon's point, people go where they feel welcomed. And if they're not feeling welcomed in some countries, then they will go to other countries. And we're already starting to see that brain drain. On that diversity piece, I just want to do a plug for a couple of women-led fintechs in Canada who have recently done some investment rounds. Brim Financial, credit card as a service, bagged $85 million in Series C funding just a couple of months ago, and that's led by Rasha Katabi, who's a really awesome innovator. Also, serial entrepreneur Lisa Shields just secured her Series B financing round, $85 million US, for FiSpan. And she was the founder and CEO of Hyperwallet for many years, sold to PayPal 8 or 10 years ago, and now she's running FiSpan. So love to see that female entrepreneurship and serial entrepreneurship in the fintech space, even if it's not in Europe. But I'm sure they're both eyeing Europe as potential markets, perhaps more than south of the border here in Canada.
Well, it's always nice to talk about fintech funding, and there have been dips in fintech funding across the board, and it's nice also to see in Europe that there's some signs of revival. Amsterdam-based SME banking platform Finom raised $115 million in their Series C, and that was led by Allianz and General Catalyst. So it's also great to have that kind of stuff over here in Europe, even though I'm not sure if this is a female-led company. I haven't dug into it enough, even though I'm based in Amsterdam. But like to see when fintech is showing uptake, and even within Great Stuff Ventures, this angel syndicate that I'm a part of, we've done or about to do 2 fintech investments this quarter, and we hadn't done any, I don't think, last year, and maybe not the year before, but we had many fintech investments from 2018, I guess, to 2022, and then we started, putting our foot down and stopping some of those investments as we were focused more on sustainability type of things. All right. If there's nothing else to focus on, then I will say thank you. But if anybody else wants to chime in with something else, then please do. We're all good? Well, thank you. Thank you for joining us.
Thanks for having us.
Thanks so much for having us.
Conversation.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.